Hi, I'm Ed Alexander with Alexander Abramson. This is video 2 of our Structuring the Deal in our Guide to Buying a Business video series. Previously in this Structuring the Deal part 1, we talked about stock purchase. In this video, we're going to talk about the asset purchase transaction. And so if you find a business that you're interested in and you're going to do an asset purchase transaction, you are going to form a new corporation or a new LLC. I've just used corporation here for easy writing purposes, but you would form a corporation or LLC. Then you will take the money that you're going to put into the deal and you would put it in the bank account of that corporation. Then when the corporation, when the sale transaction closes, the money is transferred by your corporation to the corporation for the seller, and then the corporation for the seller transfers the assets to your corporation, right? And so you then are the owner and operator of the business, and then the assets no longer appear over here, and the money no longer appears over here. So that at the end of the day, the seller gets the money in the corporation, and if there's a promissory note, that'll go into the corporation, and then you own the business, right? And so what are the benefits? The benefits of this are taxes, right? So and especially under the Tax Cut and Jobs Act, is that the buyer corporation is able to deduct the value of the business assets that are purchased from other income, and may even be able, using some accelerated depreciation, to actually create a loss that can carry forward. So there's a lot of tax benefits associated with this. The next is most of the liabilities, and almost all of them, are left in the seller corp. So if there's a breach of contract action, if there's somebody slipped and fell, as we talked about before, the seller corporation is the one that has to deal with those. And as long as seller and buyer are unrelated parties, then whatever the price is, those liabilities are left behind. Now, the downside to this transaction is that you have to go through a contract assignment, right? So if there's a bunch of customer contracts here, those contracts have to be assigned to the new corporation. Interesting to note is that most Main Street businesses, the vast majority of Main Street business transactions, and by Main Street I say $2 million and less in gross revenue, are done via the asset purchase transaction. This doesn't necessarily apply to those mega mergers and acquisitions that you might hear about on the financial news, but here this is typically what's done. All right, well, thank you for watching.